Greetings, everyone. We're going to go ahead and get started, and we are going to start with our time frames on gold. The first thing that we want to do is look at gold and see where gold is. The current market on gold is at 41.23. So when we come to the market, the first thing that we always want to do is we want to look at our time frames. It's really important that you're familiar with your time frames. So up here at the top, you have the 1 minute, the 5 minute, the 15 minute, the 30 minute, the 1 hour, and the 4 hour. We're going to be looking at those time frames to determine where we want to get in the trade. I'm going to take a few indicators off of my screen really quickly so that we can have a clean chart. I think it's really important for you to be able to look at the market and look at it as a clean chart with just your candles. I really want to go over the chart features right now because a lot of people have I realize are not as familiar, regardless to their level of trading, with the features. So of course, here is where you're going to have your symbol. We are trading gold right now in the foreign exchange market. So please make sure that you've chosen XAU, USD, gold, and that the broker is Oanda. That is typically where we call trades from. Next to it are going to be your time frames. We typically star the time frames that we are looking at the most, which is the 1 minute, the 5 minute, the 15, the 30, and the 1 hour. We're primarily going to be working off the 1, the 15, the 5, the 15, and the 30 minute. So if you have not starred that, please make sure that you go ahead and star that. And you just press the star next to it. Here are your candles. Please make sure that you star Hak and Ashi candles because a lot of times people will look at our charts and they will say, okay, I don't have that on my chart. And it's because your candles are different. So it will give you a completely different alert as well. So it's really important that you put the star next to Hak and Ashi. And then on the left panel right here, these are all your tools you're going to have to mark up your chart. And I want you to make sure that you're clicking on the horizontal line here, okay? Click on the arrow and go to horizontal line and make sure that you start it because we use the horizontal line a lot, okay? And once you start it, it typically has a panel. So when we come to the market, we will always mark up our chart. And so we are going to, you'll hear me say box it up. The horizontal line is going to go at the top, okay? Where the buy candle is. Where's the highest for the most recent buy? That is where your top line is going to go. And then we're going to put a horizontal line underneath our sale candle. Okay. Now, a moment ago, our sale area was right about in here. You can look at this and see that the market was right here. And now it looks like the market wants to push down. Okay. So we're okay with that. You will always hear me say, in order for the market to push, meaning to go in the direction that we needed to go in, that the market must open and close above or beneath. What do I mean by open and close? So let's go over here. The market was consolidating here. This is where your high was for your buy, okay? And then so here it's coming down. We are always looking for a candle with a flat top, okay, to push through. This is on the line, so it's a no. These are dojis, so it's a no. We wouldn't take that trade. We've got to find an area where the market opens and closes. So this is really, really important. I'm going to be starting with the beginners tomorrow, but this is some things our intermediate people don't understand, okay? And this is an intermediate group. This is an open and close candle right here. If the market does not open and close, then we do not take the trade. Okay. So right here, that is your candle that open and close. Actually, this one. No, wait a minute. The 200 EMA is throwing me off. It's this one. Okay. Because it cannot be on the line. All right. Thumbs up if you're clear on that. All right. It cannot be on the line just above. Okay. So this is our candle that opens and closes. All right. Locate your thumbs up. I see Rochelle has a thumbs up. Please locate your thumbs up button. Find your reactions so that I know that we are clear. Thank you, Pierre. Thank you, Denarian. Okay. The candle has to open and close. If it opens and closes, then we're looking for a continuation for that buy up. Okay. That is what we want to see. And 9 times out of 10, we will see it. This market is still in heavy consolidation. Capiche? So let's go ahead. Your arrow at the bottom will always take you to the end of the chart. And so again, the high for the market was here. And our low was right in here. Okay. All right. So there's our low. And so now we're looking for the candle to open and close. Now we have a candle that has opened and closed underneath. So now we're going to grab a push line. We haven't entered the trade yet because we want to put the push line here. I'm going to turn on the timer. The timer is down here. Okay. And so we're always looking for 20 seconds. When this candle pushes through the push line at 20 seconds, then we're going to believe the market is getting ready to push. I may now enter the trade for a sale. All right. Thumbs up. Okay. So again, here's our push line. We want to see the candle pushing through, literally going over this line, and we want to see 20 seconds on the timer for entry on the 1 minute chart. Someone just asked me, okay, Dr. LA, how come I don't have the timer? Why is the timer not moving on the 15-minute chart? Because it's not meant for the 15-minute chart. It is meant for your push line for the 1 minute chart. Okay. So if I were trading futures right now, I would be getting in for the sale. Okay. And you could have got in here in your trade. The way that candle shot down should have cleared at your dollar amount. In a 50K account, we're trading $60. In a 100K account, we're trading $100. In a 150K account in futures, we're trading $150. Okay. So here's our doji right here. So the market has pulled back. So I'm not entering. You can only enter the trade when the market has pushed through. If you get in this trade before the market has pushed through the push line, you're going to be very upset because it's going to do what it did to you right now. It's going to pull you back. It's going to put you in the negative, and we don't want to be in a negative. So if you follow the rules, you are going to be a happy person. All right. Now, if you're trading in Forex, then you're just looking for the market to push all the way down. It's going to pull back. We're going on a bear hunt, right? We're going on a destination. It's got to go up and down before it pushes. All right. So that is how we come to the market. This is our high and this is our low. All right. We wait for that candle to open and close. This one is on the line, but I would take that. And then you have this one, but they're coming to the same point. And when they're coming to the same point, that tends to mean that it's going to be some kind of consolidation. So we definitely want to see the push that we're seeing here. But what we don't want is the doji. We're always looking for a doji in 4 flats because that means that the market will continue the majority of the time to push in that direction. So let me go over that one more time so that we are clear. You come to the market, your previous area. This is your previous high. You put your line there, okay? Make sure you go to the left and click your high. And then where the low was, when we came to the market, the low was right here in this area, okay? And then you're waiting for your candle that is going to open and close underneath that line. Here is the candle, okay? You could take that one, all right? And so when you see this, it's like, okay, 9 times out of 10, this is going to continue to push. If you were entering futures, you could enter, right? For your TP, you do not need to count points. You do not need to count pips on futures. You are trading a dollar amount. Please don't make it more complicated. You're trading $100, $50, 1 or 2 contracts, your choice. So I'm going to enter here. My trade is going to clear. Do you see how your trade cleared? All right. And then so you're going to get your push line, which is next. You're going to make it a different color. And what you're waiting for with your push line is for the market to push right here. You want the market to push through the line at 20 seconds. And if it pushes, then you may enter the trade. Okay. And so it pushed, we can enter the trade. And then you have a little bit of pull back, as you can see here. Okay. There's a little bit of pullback. And then now it's starting to buy. But as soon as I get a doji, I know that it's not going to keep buying, because in order for it to be a series, it has to be a doji, same color, in 4 flats. If the 200 EMA is here, I know the 200 is a magnet. All right. The 200 is a magnet. So I'm going to expect when the market pulls for it to pull to the 200 EMA. Okay. And so this is what we do when we first come to the market.